you guys saw back then this idea of super low interest rates creates this opportunity. And those interest rates we all know are no longer around. But as you know, servicing a lot of JWB clients through insurance and in your network, people are still investing in Jacksonville right now. And I wonder, from your perspective, the folks that you talk to, what is it that's continuing the investment in Jacksonville that people see as the opportunity right now?
Yeah, well, I mean, I bought one since the interest rate, since those rates were gone. We still continued. We did pick up another one that went on in Murray Hill. If you're in a position and you're interested in real estate and you want to invest somewhere, I mean, you kind of look at it scientifically and you want to be in a city where there's a lot of potential upside. And I believe in Jacksonville. I believe that we're a city on the rise. I believe that we have a shortage of nice places for people to live. And I think that while interest rates are higher, that also provides a whole lot of tenants that need places to rent. So I'm big on diversification, and real estate is a portion of my overall plan. And in my experience, as we started, with the accidental landlord, like I'm 40, that's how old I am. I have a lot more working years, and I just feel like the potential upside for me is long enough until I'm going to actually be relying on that I could weather these little bumps. But what I can't ever do is go back in time.
I like that. I like
And
that.
I'd be willing to bet that, if we were to look on paper now, my little 2007 property that was the dog, if people would be like, if you had the chance to go back in time and buy that horrible deal back then and still own it now, would you? And I think people would say yes, that they would, even if it was a dog on paper for a decade or two.
Yeah, I'll just add on to that. I ran the numbers. So my business partners and I bought 40 properties in 2006 and 2007. So we know exactly how it feels to have a hope and a dream and build a real estate company. And then within, a couple of years, see the market values of those properties drop by 30, 35%. I mean, we really have seen the worst case scenario here. And so I ran the numbers because I constantly get that question. Oh my gosh, whenever I would tell people that I invested in 2006 and 2007, they used to look at me with pity, like, oh, I'm so sorry that you did that. Yeah. So I actually ran the numbers, and it's a beautiful story about how actual home price appreciation works and why real estate is so consistent. Because if you actually look at what the historical average for home price appreciation is over the years in the Jacksonville market, it's about 4.9% per year, going back over 40 years. Well, I ran the numbers from 2006 to when I bought till 2023. And guess what? The average annualized home price appreciation, a little bit over 5%. And it just shows that this mantra of buying real estate and waiting with an expert team to support you, that is an opportunity to have a significant part of your financial plan realized in something that is non-traditional, right? Diversification, like you mentioned, Whitney, is really important. I think it's a need in this country. We tend to have all of our assets in certain traditional investments. Well, this is the way that it's possible, and it's not as mythical about how you become a successful and wealthy individual when you know how you can see real estate working for you.
I just remembered just now a very funny conversation that I had with Alex when, we were like 25 years old or something. And you guys, the business was new, and he was like explaining it to me. And I was not your ideal client at 25, but he was still like, this is whenever we were all figuring out who we were. And so he was kind of like soft pitching me on real estate in general. And I'm asking questions. And I just remember him like these statements about real estate in general. I was like, but what if this? Like, what if prices go up or something, and people, there aren't renters? He's like, then you sell. And I was like, well, what if, prices go down? And anyway, there was just always the out. There was like, well, then that means that the opportunity is here. That's fine. It's fine. There's a way out. There's a way out because you own a thing. You have an asset. You have a commodity that you can sell or you can rent out.
You have a lot more options.
Yeah. I love the very tempered, very rational approach of, hey, diversification is good. I want to diversify into real estate. Hey, long-term fundamentals are always good in this space, and they have more options than people know until they get educated on it. And I want to be in this asset. I mean, for me, the thing that makes me excited and the reason why I recently bought a duplex to get the 5 doors and like all this stuff is what's happening currently in the city, right? Like it's this idea that, we've done a lot of data and a lot of research behind this of downtown urban cores and how they affect the home price appreciation of the area. You look at Nashville, you look at Austin, you look at Charlotte, you look at Denver, and you see that these sleepy downtowns that came online and became something have turned these into markets that everybody's like, oh God, I wish I would have bought there 10 years ago. Right. And the fact that we now see Jacksonville, we see the stats of going from 3,000 residents in the urban core to about to eclipse that magical 10,000 mark, where all of a sudden that makes sense for all these other types of developers. And we talk about that on Links That Shows, and it being on the precipice of going from what we call an 8-hour downtown where people just go to like work and then go home to a 16-hour downtown where people go like work, live, play, and entertain themselves. And knowing that causes this like jump in the home price appreciation that we've seen in other cities that I personally lived in Miami, and knowing that this is coming to me is the most exciting part, right? Like I see it as this like giant insider stock tip of like, hey, company just released this amazing thing, but they've got these 10 other things and they're about to be the greatest company ever. I see that in the city. So that to me is the thing. But I think it still bears to question, even Susie put it in the chat, interest rates, still high. GC, what's the argument for right now being a great moment to go to that chatwithjwb.com, setting up a call, and maybe not waiting for interest rates to drop and getting in on all of this?
As long as I've been investing, there have been reasons to not invest. And Whitney, you talked about a number of them back in, when you started to invest in 2020. There were 1,000 reasons to not invest, and many more scary than just high interest rates back in the day when you were investing. But the thing that we know is that real estate works long term. But I think when you're starting to ask about interest rates, I think most people they need to think about what really happens with interest rates and think about what steps you can take today to help your financial future. If we know that higher interest rates have slowed demand from housing like they have, what do you think is going to happen when interest rates come down again, right? We would think that the opposite effect happens. And when demand goes up and supply stays constant, demand goes up, what that means is there's short-term home price increases. And these short-term home price increases can be substantial, right? Just like we saw in 2020, we saw very limited supply and we saw high demand, and that led to significantly higher home price appreciation. Well, with interest rates, what nobody is talking about is that interest rates right now are higher, but when they come down, you're expected to see significantly more demand. And guess what? We still have very low supply here in Jacksonville and across many markets in the country. So what many people are not talking about is the best way to take a step forward financially in real estate is actually to think about what happens when interest rates come down, because interest rates and loans in this country are such a beautiful asset. Many people don't realize that in the United States, we have access to debt, to these loans that are so much more advantageous than other countries. And these loans allow us to take a loan out today while interest rates are higher than what we want. And when interest rates come down in the future in 6 months, a year, 2 years, whenever that happens, you simply just refinance. There's minimal cost to refinance, and you're able to refinance your loan. You're not able to do that in other countries. It's not that easy. But when you think about what's likely to happen when interest rates come down and home prices go up, the thing that you can't go back in time and do is find a different purchase price, right? As things appreciate in the future, you can't go back and find a different purchase price. So the not your average investor approach that I've been singing from the rooftops now for probably 6 months is I want people to think differently about interest rates. Actually buying while interest rates are high, if you expect them to come down in the future, is actually a very smart move as a real estate investor. And that would be the reason to jump on the phone with my team, to have some serious consideration about, is this the right time to invest? Because interest rates being high is actually the reason that right now is a great time to invest.
I was actually at a real estate event earlier this week, And there was a mortgage guy talking, and I couldn't believe that it had been a month or so since I heard it, because I feel like it's been harped into us. But the whole date the rate, marry the house. Have you guys been? They're like, I know it's cheesy, but he said that they're already seeing the first wave of people that bought houses last year, and that when the mortgage rates were like actually in the 8s, and they have come down a little bit, and they're already starting that refinance process, which will take a few $100 a month off of their loan.
Yeah, I'll just put some numbers to it, right? It costs, let's say, about $3,000 to refinance a typical JWB's properties loan. So it might cost $3,000. But if your home value is, let's just say that it's worth $300,000 today, and it goes up the typical average home price appreciation rate in 1 year, that's 5%. Well, that's $15,000 of return, of appreciation, of equity that you would have earned. So would you, as an investor, spend $3,000 to make $15,000? You certainly would, right? And it may be more than that. So there's the math behind why it makes sense to buy. If you believe the data, which shows that interest rates going down leads to more demand and home prices going up, which it's shown over the decades, this is a great time to either get started or to expand your portfolio, just like you did, Whit, when you knew it was a great time for you guys to jump in the game, again in 2020, when I think it was an even more difficult time to see through see exactly, the opportunity.
I feel like I can't tell you that we knew that it was a good. Rich was confident in the moment of the world of that unique opportunity, but I was just like, who knows what's going on? I just know that if you wait long enough, you've got time, it would be fine. And it's worked out very well for our family.
It's the classic moniker that we hear from Warren Buffett all the time, and yet it's so hard to do, the whole get greedy when people are scared and get scared when people are greedy. Like this is one of those quintessential moments where everybody got really greedy in 2021, and it was the obvious move to make, right? Like it's played out well for everybody, but right now is those like intergeneration, those sliding glass doors moments where you create this generational wealth in one time by locking this thing in, being a part of that home price appreciation when the rates go down, instead of like trying to rush into it on the back end, chasing appreciation, and set yourself up to succeed really quickly.